Welcome to The Explainer. Today, we're diving deep into an initial public offering, or IPO, for a company called Purple Wave Infocom. We're going to break down their official draft red herring prospectus to figure out exactly who they are, what they do, and what the story is behind their move to go public. Let's get right into it.
Okay, here's our roadmap. We'll start with who Purple Wave is, then dig into what their business is all about. After that, we'll get to the good stuff, the numbers. We'll explore why they're raising money now, look at the potential risks, and wrap it all up with the big question. What does this mean for a potential investor?
All right, first up, let's cover the basics. What exactly is an IPO, and who is this company, Purple Wave Infocom?
So an IPO is basically a company's big debut on the stock market. Think of it as their coming out party. They're going from being privately owned to inviting you, me, and everyone else to buy a little piece of the business.
So who is Purple Wave? They're a tech company that works in the world of professional audio-video systems. And look, we're not talking about the TV in your living room. Think more along the lines of massive digital displays in stores, complex sound systems in auditoriums, and high-tech video conferencing setups for major corporations.
So that phrase, Pro AV integration, it sounds pretty technical, right? What does a company like this actually do day to day? Let's unpack their business model.
You might be wondering, are they just a glorified electronics distributor, or is there more to the story? Well, according to their prospectus, it's a whole lot more. They're a full-service operation. They don't just sell boxes, they design and install custom systems from the ground up. But here's what's really interesting from an investor's perspective: they offer ongoing services. Things like their software platforms and annual maintenance contracts. That creates recurring revenue, which is something investors absolutely love because it suggests stability.
And they're not just focused on one niche, they're working across a ton of different industries, from big retail chains and corporate headquarters to schools, government agencies, and even high-end home cinemas. That diversity can be a real strength.
Now, to make this all a bit more concrete, check out this case study. A fast food chain wanted a modern refresh. Purple Wave came in and installed dynamic displays in the windows to draw people in, replaced the old menus with digital ones, and even turned boring pillars into interactive screens. This isn't just selling hardware, it's about completely transforming an environment.
Okay, now for the part I know you've been waiting for. Let's talk numbers. How has the business actually been performing? Let's see what the financials say.
As of the end of the last fiscal year, their net worth, which is basically what the company owns minus what it owes, stood at just over 818 lakh rupees. But that number on its own doesn't tell the whole story. The real story is in the trend.
Whoa, okay. Now this is the chart that's at the very heart of their pitch to investors. You see steady growth, and then, boom, a massive leap in the last fiscal year, where their net worth nearly tripled. They're basically saying, look at this explosion, we've hit an inflection point, and we need your capital to pour fuel on this fire.
So that big jump in growth leads us to the next logical question. Why go public now? An IPO is always about raising money. So what exactly does Purple Wave plan to do with it?
It's really interesting. A key part of their strategy is about building a more permanent professional foundation. They say it right in the document. Owning their own space is a huge part of their professional image, and they believe their future success.
So if you decide to invest, where is your money actually going? Well, they've laid out a pretty clear plan. A big chunk is going to buy that office space. Another huge piece is going toward paying down debt, which cleans up their balance sheet and makes them look financially stronger. The rest is for general business needs.
All right, we've seen the exciting growth story. Now we have to flip the coin over and look at the risks. And trust me, this is a part of any investment analysis you absolutely cannot skip.
And just to be super clear, this isn't us speculating. This is the company's own list of the challenges and potential problems they face. This comes straight from the horse's mouth.
So what's keeping them up at night? First, this is a super competitive industry. Second, the original founders will still own a majority of the company after the IPO, so they'll be calling all the shots. And third, and this is a big one, a large chunk of their revenue comes from just their top 10 customers. If they lost even one of those big clients, it could really hurt.
So let's pull all of these threads together. We've seen the business, the incredible growth, the plans for the future, and the risks. Now it's time to weigh the opportunity against the challenges.
So here's the fundamental trade-off. On one side of the scale, you have a company that's shown explosive growth in a booming tech sector. They have a clear plan for the money they're raising. But on the other side of the scale, you got to weigh that against the tough competition, the reliance on a few big clients, and the fact that the founders will still be firmly in control.
This explainer isn't financial advice, of course, but it all boils down to this one question you have to answer for yourself. Do you believe that this impressive growth story is strong enough to overcome the very real risks of a competitive market and a concentrated customer base? We've laid out the facts from their own playbook to help you decide.